Hey everyone, welcome back to Corporate Decoder, the place where we dissect corporate filings so you don't have to. Today we're diving into a report from Mangoceuticals, and let me tell you, this one's got a bit of everything. It's like they threw a bunch of business deals into a blender and hit puree. You'll see. Scroll item 1.01, entry into a Curve Material Definitive Agreement scroll. So, what's the buzz? Mangoceuticals, a company with a name that sounds like a tropical vacation, has been busy making deals. They just bought some intellectual property related to oral pouches. Think of those little pouches you see people using for nicotine, but instead of nicotine, these are for nutritional and wellness products. They're getting into the pouch game. They bought all sorts of things like patents and trademarks and even the recipes or product formulations for these pouches from a company called Smokeless Technology Corp. Basically, they purchased everything needed to jump into this new business. How did they pay for it? Well, they handed over 1,500,000 shares of their own stock and agreed to pay royalties, which is like a percentage of future sales. Speaking of royalties, Mangoceuticals will pay Smokeless 10% of their sales from any products related to the pouch technology. There are rules for what products count. If they sell the products themselves, or if they're working on developing and selling them, that counts. These royalty payments start on April 23, 2026 and continue forever if they keep selling the products. Think of it like a never-ending stream of cash flowing to Smokeless as long as Mangoceuticals keep selling those pouches. But wait, there's more. They also hired some help to make sure this pouch thing actually works. They signed a deal with a consulting company called Stratagem Solutions. The deal is to get the expertise of Tim Corkum. Corkum is going to be the president of Mangoceuticals' new pouch division. So he's basically running the whole show when it comes to these new pouch products. The consulting deal lasts for a year, but can be cut short if someone messes up, with a 30-day chance to fix the issue. Mangoceuticals is giving Stratagem 120,000 shares of stock as a thank you for signing the deal. These shares will be earned over time, month by month. They're also paying Stratagem $12,500 a month, but there's a catch. They won't start paying the consulting firm the monthly fee until they've raised $1.5 million. Scroll First Amendment to Amended and Restated. Executive Cali Employment Agreement. Scroll. Okay, now let's talk about the CEO, Jacob Cohen. His employment agreement, which is like the contract that spells out his job and pay, got a makeover. First, he's getting over 3 million shares of stock in Mango and Peaches Corp, a subsidiary in addition to what he was already going to get. Also, his yearly salary went up from $360,000 to $420,000. His monthly office allowance, which is basically money for office expenses, is going up from $7,500 to $10,000. His monthly office allowance, which is basically money for office expenses, is going up from $7,000 to $5,000 to $10,000. And his car allowance for car-related costs is doubling from $2,500 to $5,000 to $5,000. After he gets all these new shares, Cohen will own nearly half of Mango and Peaches. He's also getting a special type of stock that gives him most of the voting power. That means he basically controls Mango and Peaches. Finally, the company put out a press release announcing the pouch deal 2 to 3 to... Now let's step back and look at the bigger picture. Mangoceuticals is clearly trying to diversify and expand its business. Getting into the oral pouch market could be a smart move, especially if they can come up with unique and appealing products. The acquisition of the intellectual property gives them a head start, and bringing in experienced people like Tim Corkum could help them navigate the challenges of a new industry. However, there are also risks. New ventures always have a chance of failure. Mangoceuticals is paying for the pouch technology with its own stock, which dilutes the value for current shareholders. If the pouch business doesn't take off, that could be a bad deal. Also, the royalty payments to Smokeless will eat into their profits. On the executive compensation front, it seems the CEO is doing quite well. He's getting a raise, more perks, and a controlling stake in a subsidiary. While rewarding executives is important, shareholders need to be sure that these payouts are justified by performance and aligned with the company's long-term interests. Overall, Mangoceuticals is making some bold moves. The company is not afraid to take risks. Whether it will be a success or failure is something only time will tell. Thanks for watching. If you found this breakdown helpful, give us a like, drop a comment, and subscribe for more corporate deep dives.